Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Thursday, October 17th, 4:46 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. Market state continue to be in an uptrend. And if we look at the trend gauge here, nothing's changed over the last few weeks. Four coveted green arrows, market leaders got the green arrow short term. We're trending above the 21 EMA. Medium term, green arrow, we're trending above the 50-day moving average, and long term, green arrow as well. The market never gets into serious trouble until we have a sustained break below the 200-day moving average, and that is when we get ultra defensive. So what happened today? Well, we woke up to a stellar earnings report from Taiwan Semiconductor that ignited an overnight gap along with a lot of the other semiconductors, but the broader market kind of stalled, digest, and we closed near the low end of the range today. So here are the final numbers. 21 over 21 list up 0.06%, 10 green, 3 neutral, 8 red. Big 8 down 0.25%, RG8 down 0.37%, S&P 500 down 0.02%, RSP down 0.16%, QQQ up 0.07%, equal weight down 0.32%, Dow Jones up 0.4%, mid caps up 0.1%, Russell 2000 down 0.27%, 60/40 down 1.25%, and in-house GROTECTION up 0.13%. So as usual, we'll get into the inter-asset correlation, and I'll start with chart the S&P 500. So the S&P gapped up around 50 basis points this morning and was challenging those previous highs, and then we ended up closing mid-range. We put the high of the day within the first 5 minutes and kind of stalled. So just something to keep watch of. We obviously had that distribution day earlier this week, and now we're stalling / digesting today. So just keep those levels on watch that we've been mentioning. Obviously, 5,800, that's the first order of business down here. And then if we break that, 57.67, that, kind of top of the breakout level prior. But overall, nothing to be too concerned of, and, normal to see the market rest. RSP, again, just be aware of these just distribution days that we had earlier this week, but just consolidating in the range. QQQ, a little worse today. We had that strong gap up. High was in within the first 5 minutes, closed near the low of the day. So 490, that's a key level. We've been highlighting it here. You can just see on the chart. Earlier this week, we undercut and reclaimed. And we looked like, the tech wanted to kind of break out here. So we'll see if tomorrow we test that. This is definitely a must-hold spot. And then if that breaks 485.54, that was the pivot from this little stage 2 cup and handle base that we had here. Coincides with the 21 right there, then the 50 days below. So, tech has just been underperforming a little bit and hasn't been able to get into gear too much versus small caps and the S&P. Dow Jones relative strength today, up 0.37%. Mid caps, some nice strength again today, falling through after this breakout earlier this week, and pretty much ride the wave. This chart looks great for higher. Russell 2000, really good action today, honestly, despite being down, but 4 strong days up in a row and a tight inside day in the upper end of yesterday's candle. That's really good. So 22.59 on the Russell 2000. That's a level. That's your left side peak from the breakout. So that's a good one to keep an eye on. And the 60-minute, once we got that downtrend line break, it's just been a really nice trend up. So definitely continue to see money rotate into small caps, versus some other areas of the market. VIX, despite the gap and fade, this still closed down on the day below this 20 level, and this still has room down. We've seen in some of the best rallies we've had over the last year, 2 years, when the VIX is just chilling below, 18 and just meandering around 11 to 14. That's when you get some of those nicest low volatility uptrends, but as long as it stays below 20 and 24 at the high end, it's good. The dollar continuing to be strong, and we were talking about this a lot in videos about a month ago, is down here some sentiment indicators that we follow. The positioning for the dollar was just extremely short. Everyone was piled on one side, and then it kind of undercut this big low here, and it's been rallying ever since. But we're yet to see this really spill into equities, crypto, even gold. Gold's hanging up. The dollar closed above the 200-day today, but given this move, expectation would be for this to like pull back a little bit, as this is a pretty substantial move short term, and that could provide some extra fuel for equities and gold and Bitcoin. But see how this acts here into the end of the week and next week. Gold was not phased by the dollar strength again today, breaking out of this base, moving higher. Just one of the strongest spots in the market this year, and you can see this just massive monthly cup and handle. And this just brings me to a point I want to mention, is that a lot of people say, oh, something's too obvious. Well, real time, this gold monthly cup and handle breakout was about the most picture perfect, obvious cup and handle you could find. I mean, this belongs in one of a model book, a technical analysis book, and you can see it's playing out really nicely. And the measured move from a monthly pattern like this can be pretty big. Let's see, we're on GDX, gold stocks again, following gold. As long as it holds above this 40, looks good. Silver handling out here on the right side. This looks good if it can get through 29.56 with volume, but I like how this is handling out. Bitcoin, not bad today, down about 1.5%, but just kind of putting in a tight day. So again, 4 strong days off that 50-day UNR. So maybe a little sideways digestion. Total bond, nothing, not a whole lot to say here. Kind of just trending down. And obviously, if you follow some of the financial media, Stanley Druckenmiller has got a big short on bonds right now, getting TLT back below the 200-day. And with that, we're seeing rates 30-year getting back above the 200-day, and the 10-year as well, strong. So that's something to be aware of as well. Rates start to come back up, could spill over in other areas of the market. All right, tell the tape. So it's Thursday, and if you've been following us, you know what that means. That means we get these updated sentiment indicators. So AAII, this is an investor sentiment indicator, and bulls were down 4 points from last week, so that's good to see. Equities at all-time highs, and people are less bullish, and seeing bears tick back up as well, up 5 to 25.4. And then the NAM exposure index was down 9 points. Last week it closed at 90. This week all the way back down to 81.68. And if you look at this, you can just search in NAIIM on Google, and it will take you to the website. And basically how I use this is when we start to see it over 100, that almost always precedes a pullback. Now, in terms of depth and velocity, that you never know, but that's just a good on-off switch for this indicator itself. But can't complain being a bull when this is only at 81 with S&P right under all-time highs. So today, TSM, they had a very good earnings report, and they were gapping up this morning, bringing majority of the semiconductors higher. Closed mid-range on the day. I wanted to highlight, basically some things from the earnings call is, they said they saw strong demand for AI-related products, with AI server processor revenue expected to more than triple this year. And management was super confident in the long-term sustainability of AI-related demand, describing it as real and just the beginning. So that's good to see, especially after ASML earlier this week, and TSM comes back and crushes it. Netflix reported after hours. We'll have to look what they're doing when I get back into the charts. Treating this day as today's keys. So S&P, we continue to hold this level that we want to see. QQQ still closed above 490, but meandering right around there. And then this short-term oscillator, when the markets start to get extended a little bit, we start paying a little bit more attention to some of these breadth oscillator indicators. Percent of the stocks above the 5-day moving average. 5-day moving average is an uber short-term average. So if everything's above that, that could mean some digestion or a pullback. But all of these are pretty neutral right now. Consolidation day, 8 days above the 8, 27 days above the 21. And if you've been watching our videos for a while, you'll know that, earlier this year we were up, the market had like 50 days above the 21 day. So it can get a lot more extended. Sectors wise, uranium was strong. Again, CCJ leading the way there. Semiconductors with TSM strength, regional banks. So financials and regionals always kick off earnings season. And, we've seen great reactions across the board. PNC earlier this week, Goldman Sachs, all those. So that's positive. And the bulk of earnings season really kicks in next week. Tech and gold, and then weakness, China, still no bounce. And David Tepper, if you know that interview he did, he said he's buying everything and he wants a pullback. So he's getting the pullback that he wanted. Transports were a little weak, Bitcoin, copper, utilities, biotech, real estate. You'll see these sectors right here, right? Rate sensitive, biotech, real estate, pulling back a little bit. No trades today, so our adjusted beta remains at 1.61. And into tomorrow, keys, still watching this S&P level, still watching the Qs against 490 and the percent of stocks above 5-day. If we start to see these breadth indicators get overly exuberant to the upside, then we'll let you guys know in the videos. Alrighty, let's get into some charts of interest. So let's take a look at Netflix. They reported after hours today, and they are up 4%. So that's good to see, and that should be moving tech as well. Okay, a little bit back to back into 492 area. So good to see strong. Netflix was the first big tech name to report, so good to see that having a strong day. And then take a look at sectors. Some of these sectors I highlighted in the top. Uranium, just really strong move up the right side. So coming into the left side, resistance, maybe some digestion here. Makes sense. CCJ, this is what I believe is your leader in the sector. This looks great, breaking out through 56.24. And again, this is a heck of a move, 35 to 56 in a matter of weeks. Let's take a look at the monthly. This is a great monthly. This is knocking on the door of a, multi-decade breakout. This goes all the way back to 2007. So weekly looks good as well. And so that was uranium. Let's see, semiconductors. So, you would expect it a little bit more with TSM really rocking and a stellar earnings report, but price is all that matters. And despite it being super bullish, we'll just have to see in the coming days how TSM reacts. But this is just lacking a little bit of momentum right here. I think 240, that's like a big pivot for really expansion, still kind of in this range, but nevertheless, this 200-day and 50-day moving average is key to hold. Take a look at TSM. Great action here. Obviously, some levels to watch moving forward. 193.47, that's obviously the high of the base. And then always watch the gap lows of the earnings. But, close the day up almost 10%, 400% above average volume. It's definitely institutions. That's not your Aunt Sally buying. So good to see that there. And then let's take a look at NVIDIA. Was hitting all-time highs and then closed low into the range. So maybe this handle needs a little bit more time. We'll see. And then weakness, China, just absolutely no bounce whatsoever. This is a pretty harsh pullback from these highs. So, this is kind of a level here on the left side, and we can look at like JD. This was one of the big movers. BABA, PDD. So, it'd be if it could just be a one move wonder, we'll see. But so far, the dip is not getting bought. So those are some sectors. Let's take a look at the 21 over 21 list. We'll start with best to worst on the day. VRT, we own this in-house. got fueled with TSM, gapping up higher, was up 4% at highs of the day, but closed mid-range, but strong chart, earnings in 6 days. Card. So this is looking really good. Mentioned this, kind of walked through this yesterday, but putting a nice hammer against the 21 today. And, this is new merchandise, great earnings. So this one looks good. And we have a position as well in-house, but kind of what sparked it is right here at in the afternoon, Motley Fool added card as their top pick, and you can see it just popped the price. But looks good. So this is pretty clear downtrend line, so see if it can break out tomorrow. Coherent, just riding the 8 higher. Looks good. Shark Ninja, undercut and reclaim of the 21. This was one of the first stocks to break out before the market bottom. And so this one definitely on our radar. If it can base a little bit more, that could rest it for the next leg higher. But actually I'll go back. This is, it's just Darvis box. This was a pretty clear Darvis box, and we're kind of getting another one right here. So this one looks good. NVIDIA, let's kind of talk through it. STX, this looks good as well. 110s, that cup and handle pivot, holding above, and this looks like it wants higher out of this, multi-month cup and handle base. A-Lab as well, got some fuel from TSM as well. Was up as much, a lot of things faded, gapped up and then faded into the close, but still up on the day and nothing wrong with this chart. That is A-Lab. F5, kind of breaking the 21 a little bit, but rallying into the end of the day. Oracle, just consolidating. Palantir again, consolidating after that bounce off the 21 yesterday. Axon, just tight frozen rope to the upside. Kava really looks really good. It's getting super tight here right under highs. And when you see things right under highs get that tight, it's basically the market telling you there's not much supply for this stock in the market. FCX obviously moves with China, so that's something to note. But given the China pullback, this is actually showing a little bit of RS and sitting right at the 21 day. Take a 60-minute, got that stochastic across the other day. But if we look at the daily, this is getting into oversold. So pretty clear declining tops trend line. And you have the 21 day right there and gap support right here. So not bad risk to reward for FCX here. Sprouts Farmers Market, another frozen rope to the upside. XOM oils just, not really doing much. It had that strong move with all the Middle East news going on, and then Sense has given back more than half of it. MicroStrategies, this one's flagging pretty nice. I talked about this on the podcast today, but I think everyone is watching this 200 level, but obviously cooled down, came back below 200, but it's flagging pretty nicely. So if it takes 200 on volume, that could be a good spot. C Limited, again, just consolidating a lot of big moves from these leaders, getting a well-deserved rest. That was kind of the theme of today. Semis, gap, and fade, and a lot of the leaders just consolidating a little bit. GWRE, again, another frozen rope. And we'll go over some of these other sectors. Utilities, pulling back a little bit today, and CEG, VST, TLN, they all got huge overweights from JP Morgan, but sometimes it makes you wonder why are all the big banks upgrading these outperform, after these big moves. But nevertheless, pulling back a little bit, getting a well-deserved rest, and obviously if they base a little bit, consolidate, top of the radar. I'll show TLN bounced off the 50-day earlier this week, and then you have VST as well. That kind of had a harsh reversal today, but still, as long as it, 21 days, a good guide here for some of these stocks that are in a power trend. Take a look at regional banks. Despite rates being up today, this looks good out of this flat base. It's got 5 days up in a row now, so short term, could argue it's a little bit extended. Take a look at biotech. looks good, has the power three here with all the moving averages. So this one could be gearing up for a move. So we'll see. If we look at the weekly, you know, this is kind of the main level I'm watching. It's like the 103 level. It's rejected it multiple times, but it continues to build higher lows. So this is a sector we're still definitely watching. XLRE with rates up today. This one's pulling back a little bit, but it's got nice moving average support here, and it's in a strong trend. So, we're in ride the wave mode. The market continues higher, a lot of participation, some leaders taking a rest, and that's why there's been less trades. In-house, we're pretty much fully invested, and we're just riding the winners, raising our stops, selling into strength, and the whole 9 yards. Alrighty, so that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com, and you can reach out to Dan or Don at revereasset.com. Phone is 855 Real Wealth. That is 855-732-5932. Our flagship portfolio is called GROTECTION. We want to participate when the market is in an uptrend and protect money in downtrends. And as you can see, 4 coveted green arrows. We are in grow mode right now. And if you're ever interested in becoming a client or you want to hear about, what we do here at Revere, please reach out. And with that, I'll wrap it for Thursday, October 17th. This is Connor Bates with Revere Asset Management, telling it like it is. Thanks for listening and have a good night.